Hey everybody, welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. This is a special later edition of Trading the Close because I wanted to see what Apple earnings did, see the levels, see what Amazon earnings did. This is a big day. The stock market got crushed today. I'm going to show you again. And if you watch this Trading the Close or my game plan, the S&P chart was telling us it was going lower in the near term. In fact, let's get right into this. All right, I want to take a look at this chart. Look at this, guys. Remember this from the Trading the Closes and game plans? We talked about below this wedge pattern and consolidating. It favored a move to this target zone. Well, guess what? Today down 1.96% on the S&P 500. That's the power of the charts, folks. It is absolutely remarkable to see this type of price action. I can't stress it enough how you have to continue to be aware that the charts will guide you. They leave breadcrumbs. And if you watch them and you understand how to read them, it will give you a bias to the market, a probability to the market move. All right, back to the charts we go. Let's take a look here. The S&P, again, if we go to the intraday, you can see, again, started out negative, and it basically just went down, 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 down. This is the last candle of the day. This is the after hours action. Now, you can see initially we bounced up a little bit on Amazon earnings. We're now seeing some selling pressure bringing us back in because you know what? Apple has just reported. Let's go into the Amazon earnings first. Amazon jumping on earnings here after the company did very solidly on earnings with solid guidance as well, at least for now. Their conference call will be key, but the stock again is up, not huge, about 4% in the after hours. So again, here's your chart, by the way. You can see this beautiful parallel. Look at this, how it just hammered on the upper side of this from this low here, right here. Then notice how it bounced one final time, broke down, and then look, retraced to the scene of the crime right there. And what did it do? Chop sideways, and now we're trading up. But we're only trading, interestingly enough, we're at 194 and change right now. So we're right up towards the high end here, which, by the way, if we take a trend line and put it from this high right over, look at that. Look at that. That's 195, and that's literally 50 cents above from where we're trading here in the after hours. Now, if Amazon goes higher, we all know where it's going to go, right? Amazon goes higher, it's going to find a retrace back to this level. So if you're asking me tomorrow, where am I looking to potentially short? It's going to be right up here, folks. Basically 205. If you get to 205 tomorrow, there should be a good shortable level right there. It would be another retrace to the scene of the crime. Let's go to Apple here. Apple traded lower going into earnings. I had drawn this up. I didn't really have a good read on which direction this would go. Resistance at 237, support at 223. Let's take a look in the after hours here. Refresh. And you can see it's trading. Where is it trading? Look at this, guys. There's 223 right here. Right here, 223. It's literally right there. Amazing. This is that same trend line. So if we go back to this chart, this is the support line right here, and we are right on it here in the after hours. Now, the kicker is this. If this breaks tomorrow and confirms the day after or any day after that, then it's game over in the short term, and Apple should trade here to 214. Potentially even back to the lows from August 5th. On the other hand, right, there's always, you have to, as a good trader, you always look at both sides. If Apple can hold 223 tomorrow on a closing basis, a daily closing basis, this may be able to rally back up and retest the highs and potentially break out. But again, it's got to hold 223. That is your key support level. A break below that on a daily closing basis, and things are going to get nasty. Another nasty chart, I got to show you guys this one. Look at this today. This is the NASDAQ 100 chart, pivot low from August 5th. Remember that August 5th low to this low right here? And look, today we just closed below it. Potential breakdown. Now, why am I saying potential breakdown? Potential breakdown, folks, because there's always a chance that we don't confirm. You got to confirm to really be sure it's not a fake out by the institutions. Granted, the volume today was so big, it's unlikely to be a fake out. But again, that's a big one right there. So keep an eye on that tomorrow. In the after hours, we are seeing the QQQ after closing right here. It is slightly higher, but it's not up much, meaning that it's not out of the woods just yet. We have to see where Apple goes tomorrow morning and throughout the day. You can see Apple back above 223 here. And then Amazon still holding its gains in the after hours. Those are two big reports. Now, let's be fair. These two reports are not the only factors. The factors tomorrow, the jobs report, the non-farm payroll report. All right. The market wants a Goldilocks number. It doesn't want it to be too hot because then yields will spike higher and it lowers the odds of a Fed cut next week. It doesn't want too weak. If it was way weak, it would signal maybe a recession. It wants a Goldilocks number. Watch that reaction at 8:30 a.m. tomorrow, guys. 8:30 a.m. tomorrow. That will be when we get that data out. All right, other stocks in motion today that are worth mentioning. Amazon today getting, we just talked about Amazon. We'll talk about NVIDIA. NVIDIA getting hit today. If we go to the daily chart, this is fascinating, folks. This is a chart. This is a great example. It broke above, didn't confirm, went back below, closed above, didn't confirm, closed above, didn't confirm, and fell. Basically, this is showing you it failed the breakout, and that's never good. You know where this is most likely going to go here? I'll draw an arrow to it. I would guess you're headed back to the scene of the crime right here. Notice again, 1 hit, 2 hit, 3 hit, 4th hit, it broke out. Retrace here. That would be your key support level on NVIDIA. Microsoft got pummeled today on earnings. Meta was down 4.5%. It was not a pretty day. Robinhood down 16%. There were some strong stocks. I talked about Carvana this morning, although Carvana did end off of the highs of the day. I actually think this will continue to fall tomorrow, but listen, I could be wrong. I've been wrong on this one so far. We'll have to watch and see, but I just think, again, it's to the moon. It basically has a 90 RSI right now on the daily, which is pretty amazing and very, very rare. All right, Bitcoin. Bitcoin fell today, folks. All right, why did it fall? Why is it down 3.25%? Simple. The stock market got crushed. Okay, so as much as many of us want this to be the digital gold and the safety hedge, it is just not there yet. Please remember that. It has to mature into that. It's a 15-year-old right now from 2009 to 2024. It's essentially going through puberty right now. It's very volatile. That's going to continue until it gets older and more mature like a gold. Now, I'm not saying, listen, gold's been thousands of years. It's very, very mature, but you still want to be aware that it will slowly, in my humble opinion, mature into a basically into a much more stable asset. Gold today, guys. Look at gold here, folks. It pulled back off my bigger parallel channel. Look at that big parallel channel right there. And again, that's using the channel to our advantage to think that that might pull back. I continue to have a small short position. Actually, it's a decent sized short position in gold for the short term, but I'm net long term. My long-term holdings are still long. I just am shorting it in the short term here. All right, that's the beauty of having different accounts and different things you can do there. Okay, what else is moving? Guys, you remember what I told you was my support on silver, my first technical support on silver? All right, give you a second to say it out loud if you've been watching these videos. And the answer is $32.50. Look at what it hit today. Right there. Boom. Right to that level. Beautiful. So now listen, am I buying here? No. I don't have enough faith in this level. It is a technical level. You could get a bounce, especially if the jobs number is good tomorrow. For me, I'm going to be patient on this because it's an industrial metal and I'm still a skeptic on the U.S. economy. I'm waiting for down here. If it doesn't get it, then I miss the trade. Trust me, I miss hundreds of trades every single day. It's only about the few that I catch that matter. That's all that matters. Next up, oil, guys. Oil did see some upside today. It's had a decent couple-day bounce. But again, it still is looking like it's struggling. One thing to watch here, you have kind of this upsloping trend line here, and you're kind of right up into it, and you have a gap fill right above. That will be resistance. If it can get through here, it could make a run at this level. This is where I might consider shorting it. I'll have to reevaluate, though, at that level. And then lastly, natural gas here, folks. Let's take a quick look at nat gas. Nat gas fell again today. This is my buy level. This was my short level, but not so much anymore because we got close. We didn't get there, and that changes the metrics. Remember, the analysis that I utilize, folks, is called the PPT methodology. It's what I created: price, pattern, and time. All right, those are the factors. So when you have a level, which is a price, and then you have a pattern could be a 3-bar surge. It could be a time count. You know, there could be a bear flag, a bull flag. The key is the time factor, the PPT, the T portion is the most important. It has to come into that level within the right time frame for optimal probability. And that's one of those things here. So a level that I liked a week ago or a month ago or a year ago, it may not still be. I need to reevaluate. And all of us as traders and investors should constantly be updating based on the new piece of the puzzle that we have in the charts. All right, guys. So again, these are the types of things we want to pay attention to. I always love giving you guys this information, and I appreciate the kind words. The market is wild. Again, we're seeing a little weakness in Apple after hours, a little strength in Amazon. So what does that jobs data tell us tomorrow? That's what we're going to be following. All right, I got to get going, guys. Thank you so much for tuning into this special edition of Trading the Close with Apple earnings, Amazon earnings, and looking towards that jobs data tomorrow. Thank you again for coming to verifiedinvesting.com. I'll see you soon. Take care.